Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets. So we had a wild day yet again today, and I was looking back during the afternoon live stream and reflecting how there were days where we had ranges of 76 cents in the entire day for SPY on the way up. And there are some 15-second candles today where we saw almost that much volatility. An entire day and 15 seconds. Pretty wild to see that comparison. So the Fed came out and is cutting rates. Why did we dump on that news? For me, it's very simple. Yesterday, Move was pricing in rates being cut. If you look at the Fed Watch Tool website, which tells us the percentage odds of what's going to happen, the market yesterday anticipated a 90 to 95% chance that we were going to get a rate cut on March 18th. Now, the market was not expecting the rate cut today. It was expecting it in 2 weeks, which is why I feel we had this initial short squeeze candle on huge volume, and then we gave it all back because at that point, after that first 5-minute reaction, it's priced in. Everybody that's buying because the Fed is going to cut rates bought yesterday. Same thing as the other direction, that video I uploaded with my thoughts on the Friday bounce. Everybody that was going to go bearish into the weekend did so and positioned themselves on Thursday. That's why Thursday was such a huge red day. The market was pricing in weakness over the weekend as a potential trade, just like yesterday the market was pricing in the Fed rate cuts. I have a video on our YouTube channel called What Does Priced In Mean? And it describes this a bit in terms of probabilities. And understanding that leads to a significant understanding in the psychology of the market. So I exited my SPXL swing position today. Did it a little bit later than I would have liked to, but it was when the new low of the day hit after the bullish reaction on the first 5-minute candle. So I did hold on for a while. We pulled back as soon as we broke something in the 304s is when I exited. Back to all cash. Is this our daily lower high? We have to confirm the hourly downtrend. We had the hourly pullback. We lost the hourly uptrend. If we see this as an hourly bear flag with a lower high and lower low, essentially for all individual names, if we break the low of today, our daily lower high is set. I'm sticking to my guns and saying that I feel the most likely scenario is that we are going to see a tightening range into next week and that we're going to top out on a bounce, hold a higher low compared to the low of 285 and see this range tighten up into next week. We can pull back from where we closed 5% to get to the low of the pullback. Now, if you come out with big bear volume tomorrow and a solid red day and we drop down to 290, I'm going to change my tune. But aside from that, we're going to be looking for the equilibrium as the most likely scenario. And that's important to understand as a trader as well. I'm not boxing myself in. I'm not saying we're going to form a daily equilibrium. I'm going to take every single bit of information that I can to formulate what I feel is the most likely scenario, and it is constantly changing, and that's perfectly fine. There's no pride in sticking to a call when clearly the odds start to shift against that being the most likely scenario. So key support 297.57, break that tomorrow, and our daily lower high is set, and we focus on 285.54. There are differences that we can look at in individual names in terms of the probability that they're going to drop to lower lows. IWM is much more likely to drop to a lower low than QQQ is. QQQ has much more space to work with. IWM is a potential daily bear flag. We do not bounce nearly as significantly. If we break 146.31, we're looking right back down at 143.91 and the potential of confirming the daily downtrend with lower highs and lower lows. QQQ, if we break the low today, 207.62, we're looking back at 198.17. XLF, definitely the weight of the S&P 500 the past few days, always weaker than the tech sector. Big pullback today. If we break 26.63, we're looking right back at 25.97. We have to also be watching scenarios if XLF drops to a lower low and QQQ does not. Let's say one scenario. End of the week, XLF drops to a lower low. SPY drops to a lower low. QQQ holds $200 support. We then know that the SPY bear break is not going to get notable follow through unless QQQ breaks its low as well. Everybody's got to break their low if we're going to get back into free fall mode. Any major sector holding its low, even though others may break, is going to prevent free fall from happening. XLV, we also have Super Tuesday. I'll talk about that in a second. So XLV, if we break the low of 93.27, we're looking right back at 89.98. So Super Tuesday is today. And over the last 2 days, looking at betting sites and probabilities, the market has started to price in Biden beating Bernie Sanders. Generally speaking, Biden winning is bullish the market, Bernie winning is bearish the market. But over the last 2 days, a Biden win has started to be priced in a little bit, which leads me to believe if Bernie comes away with a solid win tonight, the market will respond bearish. If Biden comes away with a solid win, the market may respond bullish, but I don't think it'll be a significant bullish reaction because, again, I do believe the past 2-day bounce was not only the anticipation of the Fed rate being cut, but looking back in hindsight now, and as some of our members, shout out to OG Gotch, was saying, he believes the bounce was the market beginning to price in Biden having an increased chance with other candidates dropping out and potentially funneling votes to Biden. So we'll see. In the end, I don't think Super Tuesday reaction is going to be big enough to sway the tightening anticipated daily range. Biotech sector, if we break support of 88.81, the lower high is set, and we look down to 84.75 support. SMH, you get the idea at this point. If we break the low of 131.11, we look down to 124.31. At this point, being all cash, the only trades I'm looking for are patiently waiting for a play off of these lows. I'm looking for an entry based off that support to have a clear stop level nearby. Any bears are going to be using the highs of today as a clear stop level. The VIX is seeing a massive bounce. Daily high or low is looking set at 24.90, and we're going to look for a lower high compared to 49.50. So those who like to short volatility, scouting that top fish, hoping for a break into the mid 40s to then use $50 as a stop level. And of course, applying that to the instruments, whether it's TVIX or UVXY. Gold with a huge recovery day. Anything under 1660 is still a daily lower high. So we had our high, low, lower high, lower low. Anything under 1660 is a lower high, but the size of the bounce is significant enough that we can anticipate a higher low compared to 1563 is going to form once we do top out. Still in my long-term GLD position, but other than that, I'm all cash, and my GLD stop is going to be based on this current pullback low. So my GLD stop will be, I think it's 147. Silver, nice bounce on the daily. Just looking for a lower high, not as strong as the XAU, XAG chart, still breaking out. Sideways, but still very strong, which means gold is holding its gains comparative to silver. Bull miners with a huge day today, gave some of it back. So many names are correlated in this market, dumping and then bouncing for daily lower highs. Bull miners, oil, natural gas, individual tickers, all the sectors in the market, Bitcoin. Bitcoin today reacted to the Fed announcement, which was interesting to watch. So NUGT, hourly uptrend is our guide. When we lose the hourly uptrend, our daily lower high is set, and we're then looking for a daily higher low compared to 2080 from there. Oil, looking for a daily lower high, no sign of it yet. 4-hour uptrend is our guide. Last 4-hour higher low is at, come on, oil. So last 4-hour higher low was 44.83. We're currently holding that level. We have to lose the 4-hour uptrend to say that our daily lower high has been set. Why am I using the 4-hour uptrend on commodities and the hourly uptrend on equities? Because equities only trade for 7.5 hours, if that math is right, 6.5 hours for the trading day, and commodities trade longer. So the time frames are not equal. A daily candle in equities is 6.5 hourly candles. A daily candle in commodities is more than that. Natural gas, just looking for a daily lower high to be set. Anything under 203. 4-hour uptrend is our guide. It's a bit less clear than oil's 4-hour uptrend. I'd say the most important level for me is 1762 at this point. And if we lose that level, then bulls are losing their short-term momentum. So that's where we stand. Established game plans. Are you looking for daily higher lows? Are you riding short positions to look for lower lows? Are you patiently waiting to see if we form a higher low and a tightening range and then waiting to play the break of that tightening range? That all depends. For me, I'm looking to play a daily higher low. I'd love to see hourly RSI hit oversold conditions tomorrow. Give me a dump to low 290s and hourly oversold conditions, and I will look to make a play off 285.54 support. And my game plan will just be perhaps scaling in. Maybe one entry at 292, depending on what the RSI is. Another entry at 288. Another entry at 286. Put the stop of all of them under 285. All depends on how pre-market sets up. Other than that, have a good rest of your day, and we'll see you soon. Don't want to come off as a peeping Tom pervert, but I did see some ducks doing it today. Baby ducks are on the way.